Comstock Inc. announced its subsidiary, Comstock Fuels Corporation, signed an agreement with Gresham's Eastern to grant them exclusive project and site development rights in Pakistan. The aim of this deal is to bring renewable fuel production to Pakistan using Comstock Fuels' proprietary bioleum refining technologies. Gresham's will construct a demonstration facility in Lahore that processes 75,000 metric tons of biomass annually for sustainable aviation fuel, SAF, and other renewable fuels. In return, Comstock Fuels will receive a 20% equity stake in each refinery and royalties on licensed product sales as well as engineering fees. To learn more about Comstock, let's explore what they do, their plans for the future, along with the challenges and risks they've faced or could face. So whether you're watching this before or after Valentine's Day, this is the video for you. Valentine's Day because a special meeting is scheduled for February 14th, where shareholders will vote on a proposal to increase the authorized shares of Comstock Inc., including a reverse stock split. To begin, Comstock works towards systemic decarbonization by innovating and commercializing technologies and materials that can integrate into global supply chains. Their primary operations involve developing, monetizing, and commercializing intellectual properties related to renewable energy products. They aim for exponential growth within industry-wide scales by creating incentives for rapid integration across entire supply chains. Currently, they are focusing on refining lignocellulosic biomass, recycling electrification metals from electronic devices, and utilizing advanced physics-based AI for precision mining and materials discovery. Comstock also owns and manages investments in related assets, including equity positions in strategic technology developers, a renewable fuels demonstration facility, metal recycling facilities, and direct investments in northern Nevada real estate with mining claims. Comstock organizes its business operations into 5 segments: fuels, metals, mining, strategic investments, and corporate services. Their goal is to accelerate the commercialization of decarbonizing technologies. The fuels segment develops technologies for extracting and converting lignocellulosic biomass into renewable fuels. The metals segment recycles metals from end-of-life photovoltaic materials and other electronic devices. The mining segment generates revenue through leases, licenses, and related fees from their mining operations in Nevada. The strategic investment segment holds investments that complement or enhance their mission of enabling systemic decarbonization. Lastly, the corporate services segment comprises corporate functions and ongoing research and development activities outside of the other segments. Comstock believes combustion will continue to be the dominant source of power for transportation for many years. They aim to contribute to a net zero carbon objective by innovating, commercializing, and licensing new technologies that reduce fossil fuel reliance while increasing renewable feedstocks and fuels. Comstock's fuels segment develops technologies to efficiently convert woody biomass into advanced short-cycle fuels, including renewable diesel, sustainable aviation fuel, cellulosic ethanol, gasoline, and co-products. The metals segment focuses on recycling photovoltaics and other electrification residuals for efficient reuse, reducing reliance on long-cycle fossil fuels. Lastly, the mining segment utilizes AI solutions, hyperspectral orbital imaging, and other tools for precision mining to efficiently discover critical metals and resources. Their strategic investment segment makes strategic investments in their fuels, metals, and mining segments to increase shareholder wealth and enable systemic decarbonization. Competition exists in various forms for Comstock, such as competing with renewable fuel technologies, electrification metal recycling solutions, clean technology engineering solutions, technology licensing companies, and mineral exploration firms. They compete against the well-established petroleum-based fuel industry and the smaller but rapidly growing biomass-based alternative fuels industry. The company also competes with other advanced biofuels producers in RIN compliance markets. In solar panel recycling, they compete against companies focusing on one type of recycling or those with a greater financial advantage and longer operating histories. Challenges arise from competitors with more significant resources targeting medium to small companies in their markets or developing more efficient recovery solutions than Comstock's current processes. In regards to supply and demand for fuels such as ethanol, gasoline, renewable diesel, and jet fuel, which may impact throughput in the fuels segment. It is necessary to consider government programs such as the Renewable Fuel Standard 2, RFS2, that drives innovation by requiring and incentivizing the use of advanced cellulosic fuels, meaning obligated parties like Comstock need various permits to operate plants and other facilities under numerous environmental laws and regulations. It's important to mention how if RFS were to be repealed or altered, companies like Comstock may be negatively affected, since they rely on government programs incentivizing biofuel consumption, particularly biomass-based diesel. Historically, this fuel type has been more expensive than petroleum-based diesel, but these programs create a market for it. RFS2 requires transportation fuels in the U.S. to contain a minimum amount of renewable fuel. The Environmental Protection Agency, EPA, sets annual consumption levels for 4 categories, including biomass-based diesel and advanced biofuel. Naturally, the petroleum industry opposes RFS2 and may attempt to change or alter it. In terms of licenses for fuels and metals, Comstock holds all licenses currently required for technology development, with third-party consultants supporting permitting and regulatory compliance. Operating expenses to meet these requirements are integrated into service costs. Moreover, Comstock carries insurance coverage for catastrophic exposures and mandatory legal or contractual risks. Additionally, they carry professional liability, pollution, auto, and workers' compensation insurances. The company occasionally faces claims, investigations, and proceedings, but has no pending matters expected to significantly affect their business or financial situation. Then, more generally speaking, a decrease in the adoption rate of renewable energy or electrification, or reduced government support for these technologies, may negatively affect Comstock's financial performance and business growth potential. This would be due to lower demand for their renewable energy solutions, process offerings, related services, and technology licensing. The demand for their products and services relies on an increasing need for renewable energy and electrification, which could be impacted by a decline in adoption rates. Similarly, success hinges on securing and maintaining feedstock supply commitments and attracting new customers with offtake agreements. However, unpredictable events like government approval factors may disrupt these contracts. To maintain and expand, it'll be vital to continuously develop and obtain new feedstock supplies and customer contracts. Predicting when these commitments will be secured is challenging due to competition, lengthy negotiation processes, and external factors such as market conditions and government approvals. On top of that, margins rely on the difference between market prices of their renewable energy products and the costs of their feedstocks, which can be unpredictable, leading to significant fluctuations in their results. Their business is heavily influenced by volatility in commodity markets for various renewable energy materials and components. Lower prices for their renewable energy may negatively affect their cash flow and impact their overall financial position and performance. Furthermore, the operations of the company rely on sufficient water supplies for extraction, processing, and support facilities. Some planned operations are in areas with scarce water and competition among users. Continuous operation depends on securing and maintaining water rights and claims, as well as physical availability of water. Owning property and water rights brings inherent risks, including negative effects from economic conditions, real estate market changes, zoning restrictions, tax laws, interest rates, and financing availability. Likewise, drilling and analysis might not establish proven or probable reserves on their properties, meaning the company cannot guarantee that the minerals and metals they produce will cover their investment and operating costs. The quantity and quality of mineralized material are estimated values subject to uncertainty due to factors like metal prices and recoverability in the mineral recovery process. There's no assurance that their exploration activities will lead to sufficient quantities of mineralized material to cover costs. Other considerations relate to volume, mix, and composition of wasted and unused natural resource feedstocks they target. Their revenues depend on processing these feedstocks, with higher-priced raw materials like cobalt impacting their revenue more. If there is a decline in overall feedstock volume or a change in the chemistries that produce higher-priced raw materials, it could lead to a significant decline in revenues and impact their operations. So while there's certainly room to innovate technology and grow the business, broader factors constantly need to be considered, such as RFS2, water availability, the quantity and quality of mineralized material, and the fluctuating market prices of their renewable energy products and the costs of their feedstocks. For more on Comstock and other companies, follow Ascencore. Thanks for watching and have a nice day.